Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Thanks for tuning in to our 15th episode of Look at My JPEG. This one is a little bit different than our normal podcast episodes. We hosted a roundtable on Twitter Space with a ton of different NFT builders, NFT finance builders in the space. Some guests include Spice Finance, Ben Roy from Good Minds, Caviar, MetaStreet, Insrt Finance, FloorDAO, Protecc, even from Astaria, and also Nuno from Jarda, and so much more. We talked about a bunch of different wide-ranging topics surrounding NFT finance, unique protocols that these guys are building, and I'm super hopeful for NFT finance this coming year. We hope you enjoyed that special episode.
Awesome. Okay. So I think we probably have enough people just to slowly start off. Other speakers and teams are going to come up and join us probably over the next 5 minutes or so. So we're not going to get into things like too fast, but yeah, one more shout out. If you have people you want to invite, we'd love to have as many people come through for this and kind of learn about a lot of different NFT finance protocols. But yeah, just to kill time, maybe for a minute more here. Zooming out, I was thinking the other day, like I started my kind of crypto journey in 2019. So I wasn't in that initial hype run for 2017-18, but I got to kind of read the early compound synthetics Uniswap white papers, like the kind of first infrastructure that gets built around the token boom from kind of ICO era. And I feel like we're kind of mimicking that with NFTs at the moment, where you have like 21 and 22 as the euphoria, the original NFT kind of movement. And then now you have all these awesome people, all these founders that are going to be up here, kind of building the infrastructure and the protocols around that. And so this is kind of why it's exciting. Basically, hopefully you enjoy kind of listening in and kind of hearing from these guys. But yeah, we're going to get going in a minute here. Looks like a few more speakers will add up. David. Sorry, John. Cool. Okay. Well, I think, yeah, we can kind of get underway. Basically, opening question, and then we'll have a bit of a free-for-all on a bunch of just where we think the NFT universe is going and what people are building and whatnot. But just so if you're kind of tuning in, doing a chore or whatever, and you want to like understand whose voice is whose, we'll try and do one carousel question, get around to everybody once. And it would be fun just to hear like who you are, like what's your name or handle, what are you working on, like why is that interesting to you? And then more of the icebreaker question of like, what's your biggest L in NFTs? Could be trading, could be missing something. We don't need a number. You don't need to dox too hard, but just as a fun kind of way to show that we're all degens too. And yeah, why don't we start with you, Joe?
Yeah. Hey, everyone. This is Joe or Xerox Jose from NFT Perp. First of all, thanks for every founders and teams that have agreed to join for Twitter Space today. I thought it would be cool to get everyone together and just kind of chat about what's going on in NFT finance. How does one get involved in 2023? So quickly, at NFT Perp, we're building this perpetual futures exchange for NFTs, allowing people to go long and short on prices of NFTs for speculation, for hedging purposes, and we're excited to work with a bunch of different NFT finance protocols that we're speaking with today. So real quick, I think my biggest L on NFTs, probably two. One is Vampire Syndicate, and two is actually Azuki. So bought high and totally sold when there was a FUD going on. But I'll pass the mic to the next person.
Awesome. Why don't we go to Hente Avenger, and then we'll go to Justin after that.
Hey, what's up, guys? You guys can call me Hentai Avenger. Currently building at Insrt Finance with my head of product here, Punter, is also on the call. A little bit about me. I grew up in a very traditional background. I ended up trading biotech and pharma stocks all the way throughout from 2018 to 2020, and kind of ventured into crypto around ETH DeFi of 2020, and yeah, that's kind of brought me up to here. So I think my biggest L in NFTs is probably I shoved a lot of money into Mooncats instead of Punks like really early, and that trade was horrible. I probably just saw at least 7 figures. It was just heart wrenching.
Awesome.
Thanks, man. Justin?
Cool. Yeah, thank you guys so much for having me. It's a pleasure to be here. My name is Justin. I'm one of the co-founders of Astaria. We're building a new mechanic for an NFT lending platform. So we're trying to sort of expand the NFT lending space beyond the limitations of peer-to-peer and peer-to-pool. So happy to chat a little bit about that later. As far as the NFT collection I've been burnt the most on, I think it was probably, if anyone remembers HD Punks, they were like a non-pixelated take on CryptoPunks, and this was very early in the NFT boom, and I thought these things had a shot at unseating CryptoPunks. So lost a little bit there, but doing okay now. So yeah,
Rugged by Fubar.
Yeah.
That's too bad. It's funny. Well, great to have you, Justin.
Thank you guys.
Just a quick thing. I punted the Spice account because it looks like shirtless you're up here, but I wanted to have Nobi up from Floor as well. But yeah, let's go over to, is it Ogway? Am I saying that right?
It's Uguay.
Uguay. All right, my bad.
Panda. Yeah.
Uguay, over to you.
Co-founder of Spice Finance. Originally came from a TradFi background in M&A banking. What we're working on at Spice Finance is really aggregating NFT lending. It's like the high-level problem is that there's a wide variety of different NFT lending mechanics out there, and for the end user, the lenders, that can be a little bit complicated. So we just want to simplify that process and give them a one-stop shop to, deploy capital. And I guess biggest L in the NFT space, I shoved a good amount of capital into hash masks, hoping that one day would pump, and that never came. It included passing on Ether rocks at a pretty low point. So that definitely hurts to this day.
Totally. I feel like half of the biggest L's are just not participating in something you could have been participating in and waiting for some bag to pump. But makes sense, man. Cool. Should we go over to Spencer? Why don't we do Spencer and then David?
Hey everyone, thanks for having me. I'm Spencer, the co-founder of Collection.xyz. So for Collection.xyz, we're focused on building out NFT DEX protocol with an AMM mechanism. And I think our unique offering that we're focused on is the ability for people to be able to just create pools and based on token IDs specifically, and that allows you to do more slice and dicing. I've been in crypto for like 5 years now, I guess. And before this was working on product at Coinbase, as well as was leading up growth at CoinMarketCap. I guess my biggest L in NFTs would probably be CryptoKitties, jammed a little bit in there, and Loot, I suppose. That's also a fun project.
Hey guys, this is David Choi from Metastreet Labs, and I guess I'll start from the background. My first job was really doing art lending, like collateralizing Warhols and Frank Stellas and stuff like that in New York. After that, I did investment banking with real estate, gaming, lodging, leisure, so like mobile gaming, shopping malls, lodging. Jumped into crypto early on, doing gas bombing to MEV sniping and stuff like that, and an active angel investor, and started Metastreet out of a hackathon, which initially started as like a very large lending now. So we've done like 50 million loans like actively on existing platforms, evolved that to like a liquidity router, which our goal is to like price the secondary notes of NFTs that came about from P2P lending platforms and try to price them. We've kind of now our last stage, which is our most recent phase, so we're trying to redesign the lending experience a bit and introduce concentrated liquidity for NFT lending. And a lot of you guys might hear the word LTV, which is you decide a price of the NFT and then you give a loan against it. We're trying to flip that around and get rid of the V, where you don't determine the price of the NFT. So it'll be Oracle-less to a certain degree, and try to introduce that mechanism to the NFT lending sphere. And that's kind of our V2. And we're kind of expiring the routing protocol. So that's what we're up to.
Very cool, man. But go ahead, Joe.
Oh, I was gonna pass on to one more. So we've done what's his name? Courtesan from Zarta is like another lending and borrowing protocol that we invited last minute. I'd like for you to introduce yourself real quick, and then we'll kind of jump into. I think there's still a couple more invitees we've had, and we'll probably need to have some of the speakers go off, and so we can invite them on, and we can get into the agenda today.
Hello, hello. Can you hear me?
Yes, sir.
Okay, so nice to meet you all. I'm Nuno. I'm Don Cortezon. It's my avatar name, but my name is Nuno. I'm the CEO and one of the co-founders of Zarta. We are building a peer-to-pool solution to provide loans using NFTs as collaterals. We are focused in customer-centric experience and providing fair conditions to everyone in the space. We feel that there is a very big delta in the space nowadays between borrowers and lenders. Sometimes we have retail operating with institutional lending, and the opposite. And we want to try to create a seamless experience to everyone in the field. Previous to this, I was the head of blockchain at Accenture in Portugal, and I'm in crypto since 2016. So I started pre-ICO, pre-DeFi. I would say that my biggest loss was with CryptoKitties. So I aped very soon to CryptoKitties. At the time, I was designing slides at Accenture to showcase to banking industry, like, this is the future. And everyone was completely, what the hell are you saying? And together with that, I completely missed Bored Ape. I had the opportunity to buy a bunch, and I didn't take it into the project at the time. And now I'm very sorry that I completely failed on that. Happy to be here and happy to share some content and explain what we do and be here with all of you guys.
Nice. Well, welcome, Don. I know there's a lot of people who miss Bored Apes and so are with you in solidarity. Before we get into it, there are, I think, two more intros. So let's go Nobi and then the Caviar account.
Yo, I'm Nobi from FloorDAO, which is basically a DAO with the goal of deepening liquidity for NFT projects that are voted into our treasury. As for my biggest NFT L, it was probably selling Goblin Towns for 0.1 ETH a few days before they hit 7.
Nice, man.
Hey guys, I'm Tamagayaki, one of the founders of a couple of protocols. The first was Putty, which is an options platform for tail end assets, mostly NFTs. And more recently, we've been working on a protocol called Caviar, which is an NFT AMM that uses a desirability classifier to group NFTs into distinct subpools like floor, medium, rare, and so on, in order to aggregate liquidity on the base layer for NFTs. Been in crypto for a while. Probably my biggest NFT L was seeing the Milady stuff when it was really, really early, when there was still like 1,000 or so that had yet to be minted, and being like, oh, well, I'll just get back to it and mint them eventually. This is just weird enough that it might actually work. And then several months later, seeing them actually pop off. So that's probably the worst one.
All right. I think we've covered most of the teams that have been invited and gone through most of the introduction. So appreciate you guys taking the time to go through that. I think while we're doing this, the next sort of agenda, I wanted to kind of bring up what NFT finance is all about for those that are following and haven't really stepped in, or just kind of testing out different protocols and wanting to understand what's happening. I think a good question to ask most teams here would be around what are you most bullish on in the next 12 months or so in NFT finance? What are you going long? What are you going short? I think a good framing would be around the NFT finance, this entire space, it really started blowing up, I would say probably less than 6 months ago. And prior to that, the OGs that were sort of pioneering the way was NFTFi, and I guess Drops is pretty early on. BendDAO brought in a ton of traction as well. I think the exciting thing is NFT has been idle for a long time, and unless there's a very efficient way to do a liquidity unlock or a lot of the different hedging solutions, perhaps we're looking into, it's been pretty stagnant, and liquidity is pretty scarce all around. And I think a big question for the panels here is thinking about like how liquidity can be unlocked going forward. What are you guys bullish on? What are you going short on in terms of in the next 12 months? What are the team excited about? I think this will be a pretty good thing to discuss and for us to explore, ask different questions. Feel free to have different opinions. We can debate and whatnot. I think that will be a pretty good agenda for today.
I'm happy to start with one thing I'm hoping for. So one thing I'm pretty excited about in 2023 and hoping becomes more prevalent is people sort of reframing the concept of what an NFT is in their mind. I think we're going to see a lot more financial assets on chain that are NFTs that don't have anything to do with art and sort of expand the definition of NFTs. And obviously for Astaria, this is something we're very excited about too, and sort of reframing how people are thinking about lending to NFTs. And part of that would be like a Uniswap V3 position is an NFT, but not seen as an NFT in the traditional sense in the art world, but something that we do want to supply liquidity for, and something that the market really needs. So that's one of the things we're really excited about, and hopefully that gains some prevalence in 2023.
Yeah, I think like at the Spice team, we all probably agree with that vision. Like the real kind of bull case for NFTs is not necessarily tied down to PFPs. It's really looking at financial NFTs, things like UniB3 LP positions or even vault positions, option markets, as well as other kind of derivative systems, RWAs. I think the most interesting piece about where NFT finance kind of has to innovate and where this has to go and where it probably will go is around specifically both pricing and pricing risk for a lot of these NFTs. Like the beauty for NFTs is that because they're non-fungible, you can have a class of different assets that have a variety of different, let's say, values. That also presents a problem where some NFTs might be worth more than others and also might be much more volatile or less volatile than others. So kind of building out the infrastructure and the ecosystem for kind of providing liquidity at various prices and at various risk levels, I think is going to both, number one, bring a lot of liquidity, bring a lot of yield to the space, and kind of create the stability for the future of decentralized finance down the road. Even going as far as rebranding NFTFi into being core DeFi.
So a question we can throw around the panel is like, what do we think of financial NFTs? I think the number one thing that come to mind is the NFT is the Uniswap V3 positions. Those are NFTs. What other things are maybe under the radar you guys think is kind of overlooked that should be people should be looking at? What kind of prediction do you guys have?
Yeah, I think one easy one is kind of the RWA wave. As far as I know, like the vast majority of projects building RWAs like Centrifuge are looking to represent their assets as NFTs. I know like the old school Olympus bond mechanisms, like the bonding curves and whatnot, they are beginning to get represented as NFTs as well. And like, let's say options markets, so like Open, for example, those also get represented as NFTs. So, I mean, we're still very much so scratching the surface of what financial NFTs might look like. But the fact of the matter is that as crypto finance just gets more complicated and hyper financialized, various levels of risk are kind of compartmentalized and sold off in their own assets, like non-fungibility becomes more and more appealing as a system design.
Also, if I could add something to this, we were at Spice are actually launching a financial NFT, that being our Prologue PFPs are actually, receipt tokens for vault positions in our initial prologue vault. So that's something that we've had a pretty fun time playing around with, trying to bridge DeFi culture with NFT culture into one singular product. Something that we're thinking about and also investigating with regards to like UniV3 LP positions and other financial NFTs is how a secondary marketplace would look for these financial NFTs, because something that we encountered within our own community and then also within our investigation is like how to properly trade these financial positions, because open bidding models like the ones that exist for OpenSea and X2, Y2 simply won't work, because edge cases wherein sellers can rug their positions are definitely viable pathways that would be adverse for potential buyers. So something to look out for.
To build off that, that's actually an issue I don't think people are beginning to realize in 2023. Like, financial NFTs is one category, but if you just play one video game in the Web2 world, like how many items are in World of Warcraft or Tarkov? I think we'll very soon have an over-indexing problem where single marketplaces, underwriting processes by like one core underwriter is going to be insufficient for the true diversity that NFTs can represent. And this over-indexing problem is going to demand that protocols become permissionless inherently. And that, I think, is quite exciting, because it forces our protocols to adapt to the true nature of NFTs, which they're not ERC20s. They're not like traded one to one or 0.1 to next currency. And I don't think I think we can try to improve the liquidity on these assets, but they're inherently not vertically but differentiated by scarcity, but horizontally you're going to have financial NFTs, gaming NFTs, and all these other components that, well, I don't think top-down mechanisms can actually support. So these things are fundamentally decentralized, and I think the protocols are developing toward this direction of adapting toward the specific nuances and realities, and respecting the non-fungible in NFT will have novel mechanisms, which gets me pretty excited, whether it's financial, gaming, music, you name it.
The other thing that
Maybe I can.
Sorry, Don, go for it.
Thank you. Thank you, Spencer. No, I was going to compound on what David said. For me, it makes a prime use case the assets that are fully digital. We were talking about centrifuge and real assets that are tokenized as NFTs to be connected with this ecosystem. But there is a very big pain on everything that happens in the real world that then it's translated into the blockchain space. That is the counterparty risk that maybe the asset in the real life can't or it may not exist, and that can create possibilities for rug or for fraud, and can bring the problems of legacy and incumbents into the space. So I'm very bullish on digital assets that are more tied with the collections that we have as per today on collectibles, on PFPs, and also on the gaming space. I believe that's going to be very interesting to see how the collections that we have today and the collections that are going to show in the future, the utility that will be tied to the assets, how they are going to influentiate the price, because the utility can have also a very big weight on all the financial dimension of the assets. And it's going to, I believe that we will have a split of assets that are more community driven and assets that are more utility driven. It's going to be very interesting how all of these are going to be tied together, and so that we can build good appraisals for all of these, and then good underwriting models that create solutions that are robust.
To respond to that, I agree to a certain degree regarding the real world assets. Like, I think we have to build a taxonomy around that phrase, because I think US dollar is real world assets, right? So Circle is technically a bridge, real world asset bridge. But at the same time, I don't think, fintech middlemen in Africa and getting yield off those assets is like the best form of yield. I fundamentally like metaverse yield over meat space yield. It's like my common equation. But I think there are some real world assets that will have like good translations into the ecosystem. I think Unisocks technically is a real world asset, and that was kind of a meme, and it was like more of a luxury asset, which has liquidity problems. But the yields that you're looking at that actually solve 0-1 problems, that you can't get financing anywhere else unless it's crypto. It's kind of why like Maple Finance companies, these crypto market makers who could not get a loan anywhere, or even have a chance to in the real world, had a little bit better success getting some traction versus Centrifuge, which was trying to bring real world like yield over. But like I said, there are some real assets that are definitely very interesting to bridge over, but not necessarily all of them. Because anybody that has worked in finance or a credit fund here, like the best deals are being taken down by the real credit funds out there, like equipment financing that's 20% yield, that's like financing a Fortune 500 company. Like, of course you'll take that down. Now the shitty yield of like, solar panel financing in some random country that's very risky, and they want to get like 7% or some shit. That's going to end up in these like real world asset yield companies that are so desperate, and that's not a 0-1 innovation. That's like a 1-2, 1-3. And I don't like, people talk about bringing real estate over. I'm like, all right, you're getting the shittiest real estate in those kinds of yields. So I do err on the caution side of like what exactly RWA you're talking about. If it's something that really has like the material benefit of like getting traction, I like to bring the Maple versus Centrifuge traction comparable, because crypto market makers could definitely not get a real world loan, and that's kind of why they were forced to develop a kind of a system using on-chain mechanisms. And there's also the legal oracles, like what happens in a default. Like at the end of the day, like that ends up being like the crucial differentiator. But this is me just coming from the traditional credit system.
Yeah.
Yeah.
Don, do you want to respond to that?
Yeah, no, I was just going to have. I also agree to a certain level, because when you go into solutions, and I worked on banking for factoring and confirming solutions, traditional bank, for example,
those are never fun.
When they are when they are providing this kind of solutions of credit for real assets, what they do is that they go into big industries, companies that have a lot of capex that can, in reality, be sold in the future to overcome possible losses. And what we see is that the decentralized space has a massive scale, and if we start to have a very big inflow of assets from the real world into the digital world, we will start to get into those caveats where what are the good assets, where are going to be the good investments, and how do you ensure that everyone that has exposure to these markets is not getting blindsided by some player that is providing intel or information to the network that's not real. We also saw the Luna case and the recent problems that we had in this space. So as we are more in the digital space, we can get a better level of trust on the whole ecosystem. And I think that's also critical to get a reflection on all of that.
The one
I want to jump in. You finish up, Spencer, and then I'll ask a different question.
Sounds good. Yeah. So I would just say, like, I think the discussion around the financialization part of NFTs is really fascinating, right? In terms of the trends. The one thing that I would say that we've been just spending a lot of time thinking about is how do we essentially help people realize and pay more attention to the entire category of NFTs in general, right? And of course, the financialization layer really helps to increase the liquidity and also a lot of these fluidity of assets across the space, where you can maybe perform swaps between different collections and so on. The one thing I think that we spend a lot of time these days thinking about is also how people in the space are thinking about collecting, and how people are thinking about categorizing the NFT collection more in a more nuanced approach, right? Based on trades, based on rarity score, and all these kind of different things. And we're beginning to see people make better use of the metadata of the NFTs, so that it's not just a 10K collection, right? But it's about how these assets within these collections actually have unique value in themselves. And beginning to start to see some projects also assign some of these different collections or trades and so on different utility as well in their communities. So we'd love to see more of that. And I'll just like maybe add one particular point, which is we'd love to see, and we're also very involved in trying to increase the composability of the protocols within the NFT finance space. How maybe, for example, the liquidity positions on collection can maybe be used in a borrow and lend protocol or some other kind of products as well. That'd be really cool.
Totally. I want to piggyback off of, I guess, two things. One, the whole lending conversation, and then what you've just mentioned, Spencer, which is like kind of consumer behavior, like what is changing, who is in the industry. So just want to float the kind of general question, how do people think about consumers? Like who is using your product? Why? Like, is it institutions that you're building for? Is it retail that you're building for? It feels like while obviously all of us are sort of geeked out on this topic and are kind of interested, are the types of people who would read, you know, docs pages and try and figure out, okay, like what does this mean and how do I do this and whatnot. I think there's kind of a shift, hopefully, over the next year or two towards much more mainstream usage of a lot of these protocols. And yeah, curious, like whoever wants to kind of jump in, how people think about who they're really servicing with their projects.
Yeah, I can start maybe on this one first, and then love to hear how other people in the group are thinking about this. So I think the way that we think about things is that when it comes to like creating liquidity positions, liquidity pool positions, in terms of like just being very sophisticated in, you know, market making NFTs and, you know, being the ones who are really focused on, you know, optimizing for, I guess, incentives and so on, you'll probably be more of the prosumers that we call it, the professional consumers or professional market makers or whatsoever in the group here. They will be doing that. But at the same time, we realize that many of the people who are really just like, you know, buying into projects or being excited about certain projects or even using NFTs to redeem coffee or whatever, these are like the regular retail, right? Who are, you know, your baristas in Starbucks, your you know, person who is, you know, a sneakerhead or someone who's just like super into culture and so on. So I think when we're building for these interfaces, we kind of want to also put on the hat of like, how do we make sure that it's like almost as easy as buying crypto, maybe on Coinbase, Binance, or whatever, and how do we make that more simple in that sense, right? And use language that makes sense, but at the same time, not also alienating the prosumers where they are like, hey, I want to hear like what is the best way I can use this for? What are the next and latest and greatest stuff that you are throwing at me, and so on. So I think that's kind of makes the space quite a difficult design challenge.
And I was going to add on a little bit to that, and it's funny because I mean I think Spencer and I are building in sort of similar areas, but I think he kind of hits it like right on the head. At the end of the day, especially for a lot of consumers, NFT users just want to buy and sell as easily as possible or transact as easily as possible. They're like a lot less concerned about the minutia that some of us might be more concerned about. And so I think the products that literally just facilitate getting from point A to point B as simply and smoothly as possible have already such a huge leg up on everyone else, because, you know, you have, like you were saying, Ben, and also Spencer, like people that are just going and scanning a QR code in order to get an NFT, or like trading NFTs with their friends, or you know, doing things on that scale. They're not as concerned with, well, what's the yield right now on this, and how am I going to like take advantage of that, and how is my like LP position going to be collateralized within this protocol. All they care about is, if I put something in, is it going to give me some kind of return? Or if I give you something, are you going to give me something back? So yeah, like simplicity, I think, is probably the defining characteristic of how this area of like DeFi or on-chain like building gains any sort of meaningful traction. And yeah, that's mostly in line with just having good UX and like a very simple value proposition. I don't think it needs to be any more complicated than that. And it probably ought not to be, if the goal is to onboard people that don't have as much experience doing a lot of these things, but do have experience like buying and selling or any type of like similar transaction.
To add here too, I think right now NFT finance is viewed as a niche of a niche, and I'll get into why I hate the phrase NFT finance, and I think we can definitely improve on it. But right now, the user that comes to NFT finance has to own an NFT. They have to like it, and then they happen to find a use case for, well, the NFT, and then they borrow against it, and they find an excuse to. It's a very hard pitch, and I'm sure everybody here has like a hard time, like, hey, how do we get the next user, which is like, a tenth of a tenth. And I think I'm hoping for a moment where we can actually flip this on the head. Like in hedge fund world, you don't sell a stock, you sell a trade that's attached to the stock. And when people can realize that they can actually make money around the economy instead of just owning the asset, that's when people start doing it. It's like kind of like renting out an apartment to Airbnb it, where the trade is to get rental yield rather than actually owning the asset, because then you happen to find it thereafter. So that's actually, the initial like cause of how you get retail users on board. When they see this NFT finance industry that's defined and people are making money passively, which I'm sure you've seen TikToks and Instagram videos where like, hey, do this cool life hack to get passive yield or something, which eventually we'll all have to do. But the idea that we can sell a trade and you can actually actively use these different protocols, whether it's lending protocol like Spice or Asteria, or like trading it with Collection or Caviar, like that's when people really get interested, and then they end up owning or interacting with the assets as a vehicle toward that trade. So that's the moment I really want to see that switch. Like when do the trades become more interesting than the asset ownership? So that's where I see user growth finally flipping from the niche of a niche to, hey, we're at the forefront.
So I want to interject real quick and just kind of talk about, what do you guys think are the challenges so far? Like from what David just described, that's like the point we want to get to. And currently, how do we push as an industry forward, or allowing, either way it is unlocking liquidity or making lending and borrowing easier? Like what are the current challenges we see so far with different points of views while you're building different products? Love to kind of tease that out in terms of like, what do you guys think is the bottleneck? Kind of how do we push forward?
I think probably like a big piece is like not becoming complacent as a sector, and just instead of us just passing money between each one of our protocols, or like having the same 500 people do things on Caviar that then do things on like Astaria or whatever. I think like the biggest unlock is going to be focusing on people that don't have any exposure, kind of like what David was saying, and getting them hooked onto it. So like instead of becoming complacent and always talking about, oh, well, we'll get initial liquidity from the people we know will provide liquidity right now, and then we'll focus on like users down the line. I think like while that does have some merit to as like a way to scale up a strategy, in general, we like can't let ourselves stop at that point and become comfortable with having just that type of audience hooked onto the product. You need to make it so that we're actually pulling in people that have no experience prior to that. So yeah, like kind of along the lines of what David was saying, but just, yeah, cautioning us as an entire space against the complacency that comes with just focusing on getting the people that are already involved to become involved with your new protocol.
Maybe I can build up on that. That is, I feel that the users that are in the space, or the new users, they have to have a strong use case to jump and to request a loan. It's not clear for the majority of people, unless they are financial/tech savvy, that there is arbitrage opportunities and it makes sense to leverage the NFTs that they have in the wallet. Everyone that is on the borrowing side, sometimes not clear. The interest rates that are in the space are high, and so having a strong use case of flipping or invest on another product when you can get some yield as a borrower, it's one of the major stones that is blocking the industry to go further. Because on the liquidity side, it's more or less kind of easy to understand. You get a financial yield. It's just a yield farmer when you are on a peer-to-pool, or when you are a little bit more sophisticated, you can go to a peer-to-peer and do your own underwriting and your own conditions. But for the user that is providing the loan, the use case is very easy. But for the borrower side, we need to start capturing outside of the niche space by creating conditions that make people to jump into this without thinking. Another barrier that I see a lot is that we are working on a space that is very tied to communities. And inside of each community, some people that are not sophisticated on the financial level, they kind of act as a blockers for the other users to use these kind of solutions. We see a lot of people that don't understand the leverage space and start saying that solutions that provide liquidity to the space are destroying the floors, destroying the space, and they don't understand that these are tools that can make the space go further, and they have a very strong influence / impact on all the others that want to try, but they don't feel well on aping into something that the majority of the community doesn't understand. So if we start removing those barriers, we can see a very big inflow of people to start using these kind of solutions in the future and growing in the general space.
Yeah, one thing from my perspective is the real value proposition of crypto is monetization of digital assets, and maybe like defining what digital assets are really in the first place. But just, you know, the conversation around real world assets made me want to bring this up. Like, the real world assets have real world financial rails that work, and so as you think about like what can crypto do differently or better for monetization, it's really digital assets. And so to me, the two really big and obvious ones would be like music and social, content creation, social reputation. And thinking about like the music NFT space or the social graphs like Lens and Farcaster or Sound.xyz, those platforms fundamentally don't offer any better user experience beyond monetization to the users of those platforms. But monetization is a fundamental improvement on user experience and on mainstream adoption as a whole. And so if you can have music distribution platforms that are Web3 native, you start to open up a lot of monetization avenues for artists that don't exist otherwise. And if you have social graphs and social media platforms that are Web3 native, then you open up, personal credit that wouldn't have been available otherwise. And so for everyone in NFT finance to succeed, you have to have mainstream adoption. As long as you've spent a little bit of time in the space, you quickly realize that, the pie itself needs to grow for any of these protocols to succeed. And the way that the pie grows is taking advantage of the fundamental value proposition of crypto, which is, again, monetization of things that can't be monetized right now. So redefining, what assets even are, and digital assets is, taking something ephemeral like a social media, follower count and actually saying that is worth some amount of money, and that amount of money is X, and we can, you can borrow and lend against your social graph or borrow and lend against, future royalties from music streaming. I think seeing the distribution platforms start to develop really in the last 12 months, and hopefully in the next 12 months, you see a big jump forward in that, will enable some really exciting kind of mainstream adoption that we haven't seen to date.
Yeah, one question that I kind of have that's going along this strain is, I think like the biggest difficulty with kind of building out the tools for NFT finance, you saw this problem in DeFi as well, is a lot of, because you're dealing with digital assets and the yields are, or whatever you want to call it, the value or the utility for these assets is coming from a digital space. A lot of the like pricing or value behind a lot of these assets is like fundamentally recursive. So I'd like to kind of ask the panel here, are there any kind of specific digital assets that seem to you like they are, I guess, like more creditworthy, easier to lend against, or will kind of drive actual value or utility to users? This is like not considering the real world asset space. I know the social graphs are mentioned, as well as kind of like gaming, GameFi assets and whatnot. But I'm just curious if there's any others that kind of seem particularly interesting.
I can draw some comparables to maybe traditional industries too, like especially from the art world. So art lending is Well, it's actually very rudimentary in terms of the lending processes, and how they like underwrote like things that don't really have the cash flow asset generation, which we all know DCF, right? It's the easiest way to calculate a value, and it's also a very questionable way of calculating value, but people still do it. And I think in traditional finance too, and agree, I'm sure you were too. Like it's a lot of like hand wavy like methods to determine value. Like JP Morgan will sell to like a Twitter before their IPO, like, hey, you're between 100 billion to 1 billion or something, and that's your worth, just to see what the valuation is. It's tough to say what a single method of valuation is for underwriting the value of an asset, which is why you have a football field. The lowest value to highest value, the buyer and the seller have different values of what they think it should sell for. In the art world, the way it was done is entirely well. If you don't have cash flows, you have precedents. The best method that we've seen is just seeing like what is the historical volatility, and you're almost writing these like an option. And we actually, when we were doing it, we actually developed our own methods of calculations, namely artist volatility indices, to see like what the price would move towards. But at the fundamental level, like it's purely a supply and demand model where you're seeing like what is the end use case for owning this asset. It's for next buyer to buy it, but for the art world, it was to donate it because you get a tax write-off. That was the easiest method. That was like the outflow. For NFTs and PFP specifically, I think it's identity and it's clout at this point in time. It's almost like an automobile where you just kind of show off the value of these assets. Like you're really identifying with the community, and this is almost your entry into a community, but also it's your demonstration of wealth, but also demonstration of identity, which I think any luxury or cosmetic or fashion industry kind of represent. So it's really tough to put a methodological price beyond just like past historical prices for our methods. And we're hoping that in our future we want to stop underwriting entirely, and that's kind of our goal, because it's too difficult to underwrite the sword of a video games asset, because this over-indexing issue is definitely going to be real. Like just looking at Cyberkong's game, which I didn't even know how to game until like a few months ago, and how niche these assets get, or like a Wolf game getting more and more nuanced. Like, how are we going to underwrite all these assets? Because they're just getting more and more niche. Well, the local community will drive that value. Is my theory. But yeah, I think it's the value is very questionable, but at the same time, I'm sure somebody else will buy, lend, or trade against it. So that's what I'm saying.
Yeah, the one thing I would put out there is that, I think anything that in NFTs and digital assets specifically that makes it fun for me, and also I think what we've seen a lot of people just get very drawn to, is the ability for a lot of like trends and memes to just kind of emerge almost like overnight, right? And I think you've seen kind of a little bit of notion of that in the Solana community recently with like the new kind of like meme coins and so on emerge. And the moment that happens, a lot of people will start realizing that, hey, they want to get in on that, or they want to be a part of that, right? And that value suddenly becomes, I guess, more liquid. And I think we want to be able to enable people to be able to express those liquid valuations and sorts more easily. I think for us, at least, for collection, we focus on this ability for you to express that with a pool that you created. You're looking to buy essentially which are of these NFTs. I think we're going to create more creator tools and more of these kind of mechanisms where people can appraise and maybe contribute value, and maybe even oracleize some of these things. That'd be super exciting.
Yeah, and I think I just want to really highlight how crazy this industry is. Like, you can make $100 million value like asset class out of nothing, like purely out of hype value, and you're like, hey, our gobblers is worth this much. Just day one it exists. It's the capital markets that really has been unseen before. Like the last time we really invented like a real capital markets, equities or even debt, and they both happened around the same time. Actually, the first time you had national debt is also the same time. The Dutch Indies company like started trading. Like, you can create things without cash flows to suddenly create a capital markets, and this is why I like to focus on like NFT finance isn't enough to describe what we're doing, because if you believe in the metaverse, then you believe in its economy behind it. And if you believe in an economy, well, you definitely believe in interest rates and Jerome Powell controlling everything above us or above him. And that's kind of what we're inventing. Like we're inventing a capital markets for anything that is digitally native, which means that you could trade, borrow, trade anything of value that just exists online because we collectively believe in it, and we've created assets that are hundreds of millions and probably soon hundreds of billions out of pure community will. And it's a new social contract. So it gets me really excited. And it's also why I don't believe it's sufficient to call it NFT finance, when in reality, it's an entirely new capital markets, and then it's an entire new industry and entirely new mechanisms.
And
well,
at the end
of,
go ahead, sorry.
You're kind of financializing internet culture at the end of the day. Like I had a really interesting chat with a photographer once who was like, okay, photography had no value. And then all of a sudden NFTs come along and it unlocks that value. Like it was kind of latent there before, but there was no way to monetize it. And I feel like in some way, like the NFT space or the NFT side of crypto, I guess crypto at large, is just sort of financializing internet culture, which had value or has always had value, but there's no like vehicle for it. And you're building all of the tooling around that entire like global mega industry, right? And so it's just, like the design space is massive. I do want to kind of direct us just a bit towards predictions. I know some people have to kind of piece at the top of the hour. So if it's okay, just sort of some forward focus. What do we think is going to happen over the next, maybe like a 6 and 18 month time frame? Obviously, crypto moves really fast. 18 months is like hilariously impossible to predict. But would be curious, just for everyone's kind of takes. It could be like, what are you going to be building over a 6 or 18 month time frame? What do you think is going to happen? It could be kind of consumer behavior, like what do you think is going to shift in terms of market dynamics? But just curious, like what are people thinking as they look forward now?
Maybe I can jump. Just to say that in the next 6 months to 1 year, I see that the majority of companies working on this space, we will engage almost into a feature war. Feature as a functionality, because everyone is trying to find PMF and understand what people want and how to engage the different verticals. I believe that David went super well. This is a few new capital market being built, and it needs the ecosystem as an whole is fully primitive, so it needs all the infrastructure to be designed from scratch. And so I believe that everyone on this space is going to try different approaches to see how they can bring users to the platforms and how they can attract liquidity and attract people that need liquidity. And for the next 18 months, then we start to see an overlap of capabilities. So basically, there is going to be a strong hint on what are the winners on the space, what people are loving, and so we will have the different companies to start trimming off that innovation and start focusing on the features that make the system to move to a flywheel.
Thanks, man. Other people?
I sort of alluded to this at the start of the call, but I think, taking PFPs and art out of it, I think the 721 standard will be just continually more adopted more and more by DeFi in general. I mean, we're seeing that with uni LP positions, pseudo swap LP positions, Liquidity's chicken bonds. Some of you might have heard of the Dyad stablecoin is using an NFT mechanic. I just think we're going to see, as DeFi gets more and more advanced, I don't think it makes sense for all users to have sort of fungible positions in protocols. And so I think the 721 standard will continue to grow. And that's personally what we're most excited about. And we're trying to meet, as many folks that are building new projects in this space. So if you are building a new financial primitive that uses 721s, definitely please reach out and would love to chat with you.
I think for me, the way I think about the next 6 to 18 months is that we'd love to just see more culture of the NFTs kind of evolved away from, not say away in a bad way, but it's just like to improve and just like multi-layer this with a lot more nuance, with thinking of how NFTs could be, like a legitimate and great digital asset category on its own, right? So I think we are seeing some level of like maturity, and also some of the things that we deem as frothy to kind of have been a little bit more cleaned out over the next couple of months, and that's really nice, right? So starting to see a lot more real interesting things over the last 6 months as well, even with like the ApeCoin staking kind of things come to light, and also a lot of new projects being launched and so on. So yeah, just love to see more builders building cool shit and bring a lot more interesting things to the NFT space.
I think personally speaking, working at NFT Perp, we've spoken with a lot of different NFT lending and borrowing protocols. Considering how the NFT lending and borrowing DeFi protocols like NFTFi and BendDAO and Drops really kick off the whole idea of NFT finance. And I think including NFTX and all that, and it really focuses around the concept of liquidity. My personal thing, as NFT Perp, our biggest challenge from the day one was how to price NFTs. NFTs are unfungible, so to price a collection of them is difficult, especially with PFPs. And I think the whole NFT market has been very, very one-sided for a very long time. It's mostly valuations are very one-sided, represented based on floor prices, and that's usually around the ask for on the sell side. Liquidity gets thin, people undercut each other, bids are pretty thin because of fees on OpenSea or royalties, and you kind of see how the past 6 months played out with different aggregators come out, different NFT marketplaces came out, usually trying to gather a good amount of market share by undercutting each other on fees or royalties. I think there's going to be a shift with the increased adoption of less fees and proprietary less on royalties, and also liquidity protocols that are coming out, like Caviar, like Collection, like NFTX, and there's a bunch of different ones out there. Liquidity becomes thicker and thicker across the board. So easier to entry, easier to exit across the board. With the lending and borrowing protocols coming out, competing against one another, lenders, because of the competitive lending landscape, the interest rate will get better and better for people to borrow. And loan to value ratio and terms just get easier and easier. So it starts to make more sense for borrowers to look at different options and have more options to choose to lend to borrow from. I think that unlocks a lot of things. And I think the keyword that I'm pretty bullish on in 2023 for NFT, or for lack of a better word, NFT finance in general, is how much liquidity it can unlock in the space. And that benefits a lot of different people.
That threshold where the interest rate becomes low enough where things are really competitive, it's not less of a predatory kind of interest rate where people just really need liquidity, I think actually unlocks a lot of different mechanisms for how we can actually be more composable. Because right now, if you're borrowing at like 67%, it's tough for you to actually do anything with that money to beat that interest rate. So as the rates come down and the space matures, you'll be able to do combination trades. And I think ape staking has been pretty interesting because I've actually talked to people who are shorting Bored Ape yachts while long coins or vice versa in order to get like a delta neutral strategy in order for the yields to actually make sense. And this comes back to the idea of doing trades and that being at the forefront rather than just owning the NFT. So you'll start seeing value flow in and through the protocols, but also in and through the NFT in of itself, which causes, well, obviously more need for liquidity, more need for demand, and also more competitive rates. So I think composability doesn't exist at just the integration level, but also at the market rebalancing equilibrium level, and that gets me quite excited. Because it really defines what exactly the NFT represents in value and in terms of its own identity, like in its purpose. We've seen PFP projects realize that they don't have any utility, so turning into video game assets, or they're turning into like content assets and media assets, like Disney of NFTs or whatever. And that I think is shifting not just what people are building, but also the entire identity of the space. And it gets me pretty excited because it makes you question, like, why do you really play a video game, as an example? Well, it's not for me, it's not because it's fun. It's because I want to win the economy, usually. And that's usually how I play most video games, from Diablo to like Maple Story, RuneScape. Like I'm trying to have this, I guess, satiate this desire to hoard or something like that. And that can be exciting. I don't know what that was.
David sounds like he's playing a video game.
Is that me?
No, it was me, sorry. I clicked on the soundboard. I didn't knew that this feature existed in the spaces. I'm so sorry, David.
No worries.
It felt like Mario got a power up or something right in the middle of the space.
Just glad it's not something else.
Cool, guys. Well, unless there are other people who have predictions, we can kind of do one more wrap-up question. If there's anything people want to kind of share, where people can follow your project, your protocol, maybe an announcement if there is something like you're working on imminently, anything as kind of an exit to wrap this up here would be great. Happy to kind of go around, and whoever wants to start, feel free.
Yeah, I can kick off. We're doing a testnet competition soon, so that'll be pretty fun. Stay tuned at Collection Web3.
On Astaria's side, we have active Code Arena Challenge happening right now. So if you are an engineer, feel free to try to break our smart contracts. I think we have a $90,000 bounty, and this is our second or third audit. So right after this, we should be gearing up towards launch. So thank you guys so much for having me.
On our side, and basically we are closing our second audit now, and we will do an official launch in the next weeks. So it's going to be get attention to it, because it's going to have some very interesting mechanics that I would love to invite everyone to test and to play around.
And for MetaStreet in the next 2 to 3 weeks, if you join our Discord, we'll be doing a few announcements on ways to help protect your floor for your NFT project that you are in favor of. So if you really like the punks and you want to find ways to improve the community, we have a free mechanism to help you route liquidity toward that asset. Not necessarily on spot, but maybe other ways to just not sell on spot. So we'll be making that announcement, and the different mechanisms they'll be launching, and it requires active engagement in order for that function to work. So keep in tune.
Yeah, for Spice Finance, January 30th, we're launching a Prolog NFT, which is closed access to getting yield in NFT lending across 5 current marketplaces and over 8 or so different collections. So jump into the Discord to kind of find out more, get to participate.
And for Caviar, we're wrapping up our audit. Should be launching towards the end of this month with our Caviar Lite version. And we've already started development on Caviar Pro, which should have some interesting features that maybe are not super easy to see from an outside point of view, but should be pretty cool to see how users interact with them. So yeah, look out for our launch at the end of this month. And yeah, thanks for having me, guys.
Awesome. Joe, do you have anything to share to wrap up?
No, that's pretty much it. I really appreciate everyone joining. I think we had such a short amount of time, but it was great to get everyone's different opinions and their take on what's happening in 2023, what you guys are bullish on. We'd love to do this sort of roundtable perhaps once every month or once every 2 weeks. So for those that are listening, appreciate you guys tuning in, taking the time out of your day to get excited about NFT finance, and we'll see you in the next one. And for us, NFT Perp, if you are interested, you can join our private beta. It's currently available. You can join on Discord and apply for a wireless spot. And yeah, thank you guys for coming on. Really enjoyed today's conversation.
Yeah, go join their private beta and pump the Azuki liquidity, please. Would be much appreciated.
Just want to say that we also have Azarta casts, and we are happy to host everyone and to talk about these topics all the time. So we also have a 2-week space. So everyone that is on the call, happy to have you on board and to talk about a little bit more about finance of NFTs for the future.
Absolutely.
Awesome, guys. Well, thanks everybody for tuning in. We'll probably do this at some point again in the future. So follow everybody, and yeah, I hope everyone has a good rest of the week. Bye now.
Bye.
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 Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.